You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TASTYTRADE. You take the unbeaten path. You root for the away team. You wear shorts in winter. You don't put ketchup on a hot dog. So why wouldn't you trade with a broker that lets you go your own way? TASTYTRADE. Stocks, options, futures, and more. You choose. You trade. Chart moves with hundreds of custom indicators. Stare at the candles till you see them in your sleep. See it, click it, trade it on mobile, web, or desktop. Supported by a trade desk that knows how traders think. The data, the tools, the knowledge. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. TastyTrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is Monday. It is noon Central. It is 1 p.m. Eastern. It is time to commence our broadcast week with everyone's favorite bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are binging and mainlining these days. Yeah, I see the bandwidth bills. Keep driving them up. It's okay. Not a bad problem to have. Hope you had a great weekend. Hope you're ready to kick things off in high style here on the network. We're going to mix it up a little bit today. Should be fun. Stay tuned for that. Of course, I want to remind you of three things at the top of the show. First off, if you're just listening to the Option Block, man, you are missing out. Nearly a dozen other shows coming at you on the network. So make sure wherever you're getting this, it's available on just about every platform under the sun. Your YouTubes, your Audibles, your iTunes, your Stitchers. I think Stitchers may be gone now, but whatever replaced it, all sorts of fun platforms out there. Make sure you're getting the full radio network feed, not just the Option Block. But if you like what you hear, I know this show's been running for over a decade. We have a long backlog of reviews, but those algorithms, they like the new stuff, and we all know there's new people continuing to discover the world of options all the time. So if you like what you hear, this show, anything else on the network, throw a like, a star, a rating, a comment, whatever your platform lets you do. All of it in aggregate does help new people continue to discover the content. And of course, if you want to discover a little bit more content in your lives, maybe you want to take your trading up to a little bit of the old 11, only one place to go, theoptionsinsider.com/pro. Once you're there, you hit that button. You're going to get access to 250 plus archived episodes ready for you. The second you hit that button, you get 2 exclusive shows every week, exclusive pro podcast feed, live access to this and everything else we do. So you can come in, heckle us live here on the show, of course, ask great questions in our pro Q&As, and a whole bunch of other fun, great giveaways. Congratulations to Wolfpack, the winner of our October Pro Trading Crate. Get your name in the hat for the November giveaways. TheOptionsinsider.com/pro is the place to go. As we mix things up today, we're not going to have really time, I don't think, to do the 80s pro wrestling. guessing game this week, which is probably good. Looking at our assembled people today, not many people are going to be able to guess anyway. So probably a good thing we're mixing it up today. But joining me on the old Option Block All-Star panel this week, first, we got our old friend from the hinterlands of Chicago, a.k.a. St. Charles, none other than Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the Monday edition of the old show, sir.
Always a pleasure to be here on a Monday, starting off the week right.
Doesn't seem fair to do the 80s wrestling trivia when it's only you to really answer it. So it would have been a bonus. Maybe I'll throw a bonus point in there for you if you like, even though you are already crushing Sebastian at it. So I don't know. That wouldn't be that fair either. I don't know. But we'll see. But maybe we'll workshop it after the show. Because also joining us this week from the dark and stormy shores of Maine, none other than the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. Are you pretty excited that there's no 80s wrestling trivia for you today? I know you were sweating that earlier.
Well, you know how good I am at it.
You were amazing. I've never seen someone with a deeper bed of knowledge.
I think I did win one. I not win, but guess one question once out of, I don't know, a dozen tries. So I will be sad for the listeners that they can't hear me struggle over trying to figure out what the heck you're talking
Hearing
about.
you guess the three people that you know over and over again is certainly joyous, I know, for a lot of our listeners. But they'll have to forego that this week because we are joined this week rolling out the old Tasty Trade hot seat for a first-timer here on the network, Mr. Scott Sheridan, the CEO over there at Tasty Trade. Scott, welcome to the Options Insider Radio Network.
Well, thank you. I'm happy to be here, but I have to say I'm a bit sad because my 80s trivia is pretty strong, so I might have to come back if you guys are going to resurrect that.
Matt, now we go very specific into the vertical of 80s wrestling, so I don't know how strong you are there, but that's where we go.
No.
See, I didn't want to throw you into the deep end of the pool on your first appearance, so maybe down the road we'll let you brush up with Andrew, and then you guys can come on a later episode. But before we go down that rabbit hole, really quickly, Scott, since this is your first time on the show and indeed on the network, let's do what we do with all of our first timers here. Why don't you give our audience a bit of an overview of your background in the world of options and derivatives, as well as what it is you do day to day over there at Tasty Trade?
Sure, happy to. So I started my career out of college on the floor of the CBOE. I spent almost 18 years as a market maker, primarily in the OEX, which is the S&P 100, doesn't really exist anymore. I think there's one market maker left. Finished there. My partner and I, Tom Sosnoff, we started Thinkorswim and spent the better part of a decade, a little more than a decade at Thinkorswim. Took a few years off, which was amazing, and then came back and started Tasty Trade. It was originally called Tasty Works. We changed our name to Tasty Trade about a year or so ago. I've been doing this since 2015, loving it, and my day-to-day responsibilities probably a little different than other CEOs in the space. I literally sit or stand right in the middle of the trade desk because that's where I believe the best place is for me to be. Very involved with every aspect of the business, primarily during the day. It's with our risk margins team, but also involved with everything, a little bit of technology, marketing, you name it. And basically I'm somehow involved with it.
You're the second guy I've talked to in the last couple of weeks, old school OEX market maker. So OEX making a comeback, maybe, Scott. I don't know. I guess we shall see over here.
Yeah, I don't know about that, but a lot of fond memories.
Yes. The good old days of the 1-5 are unfortunately behind us now. But you know what's not behind us, listeners? It's the trading block. So let's get to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. I see our live chat missing the 80s wrestling. Don't worry, we'll get back to it. I know a lot of you love it. We need to take a break. We've hit all the major guys and gals. We need to do a refresh and dig a little deeper into the second or maybe third layer of 80s wrestlers. Don't worry, it'll be coming back at you before we forget it. But what's coming at you right now, listeners, is a whole bunch of mixed action out there in the market today. The S&P, they were trying to rally, and we all know it's been rallying for the last couple of the weeks, best couple of weeks we've seen all year, pretty much out there, just aggressive ever since Powell and company We were threatening 4,100 in the wrong direction not too long ago, and here we are now north of 4,400. So 300 handles and change to the upside in the span of just a couple of weeks. So no bull can be sad at that, even if they are taking a brief respite today, even though it's mostly unched off about 1/10 of a point as we're kicking off the show here. The NASDAQ off a little more, off about 1/4 percentage point, and the Dow up about 0.15%. I mean, all this mixed action means our vol friends out there are pretty much mixed as well. VIX, when we kicked off the show, up slightly, up about 1/4 point, about 14 3/4. Still hanging out in that mid to high 14s range. Just been in for a little bit. VVIX, so the vol of vol itself, at about an 82, so it continues to come down after hanging out in triple digits for a while. Powell and company pretty much put the kibosh on that, down another 3 points since the Thursday show. VXX 1965, down about 1/3 point from the Thursday show. UVXY at about 12, down 0.5 point. SVIX back north of 30 again, 30.8 as we kicked off the show, up about 0.6 point. And the wild beast that is UVIX, 2260 when we kicked off the show, down a little over 1, about 1.15 points from where it was this time last week. All right, a lot to unpack. Scott, you are our guest, so we'll give you pride of place. Obviously, it's not a crazy, tumultuous day, but it has been a crazy, tumultuous period over the last couple of weeks. So what in particular is catching your eye today? And, of course, what's been standing out to you in this just explosive rally over the last couple of weeks over there at TASTYTRADE?
What's been standing out to me is the explosive rally. You know, if it's funny, we like to say that nobody knows anything. And anybody that tells you that they do doesn't. So I think we always joked and said, if you walked into the bond pit and said, here's the number before whatever the big number was, market makers, you'd be 50-50 whether you got it right or wrong. I'm shocked that we're over 4,400 and the S&P is given the state of the state. There's a lot of, let's say this, the perception could easily be that there's a lot of information out there. Pick a direction, and you could probably find something that would suggest the market should be lower. I think what's telling me is that the market is much stronger right now, and for a variety of reasons, it's just pushing off the fear. So I'm optimistic that this can maintain. You know, it could obviously change very quickly, but I think a lot of bad news has been thrown at the market and is going to happen over the next year. You know, we're just beginning to talk about, we've just entered into the 1 year from the next election, and clearly there's going to be a lot of volatility around that situation. We'll see how that spills over into the markets.
Yeah, so if we're all tired of talking about the Fed, and I think we all are, don't worry, we got the election coming up to add a lot more fun right. out there to the fire out there. So yes, look forward to more very controversial fun to be had over the course of the next year. Listeners, let's keep on rolling. Let's go around the horn. Let's go out to the dark and stormy shores of Maine. Mr. Rock Lobster, sir, what's lighting up your tape in a mostly kind of unched day out there, sir?
Well, you know, I could have sworn Moody's just said we're downgrading, we're putting the U.S. on credit watch. I kind of feel like they're starting to become the, like, somebody yelling fire in the movie theater or the boy that cried wolf, you know. Now, I don't disagree that whatever the path that the U.S. is on, spending money is kind of crazy, just because it is. But the market doesn't care. So ultimately, you know, it's like anything trading. It doesn't matter until it does. So at least for right now, I guess somebody figures the U.S. will, you know, the budget will change or something will change somehow. But stocks don't care. Like I thought we would get maybe a 1.5% move down, maybe retrace Friday's move today. But like usually you see news like that and we sell off. But right now it's like, no, not at all. So it didn't happen, and all VIX futures are lower. So ultimately, you got to say, hey, the market doesn't care, at least for right now. So what I'm kind of curious is if some parts of the market that kind of been lagging, like the Russell, are going to like kind of catch up until the end of the year. So, I mean, if nobody cares, I think there's plenty of reason to be optimistic when the news is so pessimistic. There you go. That's about as happy as I can sound, I guess.
I know that's pretty optimistic for you. You know, your buddy, Mr. Matt from Orats, one state over. He's been on that 3,000 before 5,000 train for a while. Looking a little less likely now, but we shall find out there. I believe before we roll off, you had a pressing question for our guest, Mr. Andrew, that you had to get off your chest.
Oh yeah, Scott, what was your acronym? I was in the SIBO for about 6 years in the 90s, so I was in the Group 1 DPM by the OEX, so I was just curious.
Oh, sure. I was SHR.
Oh, okay.
Stood up in the back. Yeah, stood up in the back. I don't know when the last time you were down there. For anybody that ever had the opportunity to go down and see Open Outcry, it was really amazing. I took some visitors down about 6-9 months ago as the old floor was closing and they were doing light construction, and it was really sad to see.
Yeah, it was, and then they had the new one. I actually had I had feelings that the old floor was gone, and then they kind of have this new sort of whatever funky thing. But it was the first time I went back after I've been off the SIBO for 20 years. I had known people on the floor every year as I went back every year. And this was the first year I didn't know anybody. All the old guys have gone on to do other stuff. They're all actually now like in executive positions in the SIBO or something. But anyway, I was just curious. Yeah, I knew a couple of OEX guys, but
they're all size crypto players now. That's what they all are.
Yeah, I guess so. Or they're teaching people how to trade options. Who knew that would be a gig? I thought there'd be zero benefit to anything I knew. Surprise!
It has some utility at the end of the day, as we keep on rolling. Speaking of the old timers and Scott saying, nothing could touch this market, it does remind me when I first walked on the floor of the SIBO myself, young kid straight out of college, and I'd see the markets rallying or the markets selling off, and I'd say, wow, I wonder why we're rallying today. What's driving? And all the old timers just look at me and laugh and say, more buyers than sellers, kid. And I thought they were a bunch of just crotchety old bastards, and they were. But they were also right at the end of the day. And I learned over time, I had that cynically beaten into me. You know what? You are right, old timer. More buyers than sellers. At the end of the day, it's what it boils down to. Mr. Uncle Mike, you've never been accused of being crotchety. You're always optimistic, always effervescent out there. And it seems like we're vacillating. Maybe we're going to tip towards another Uncle Mike type of day. S&P briefly ticking green again here, ever so slightly. What's catching your eye out there in a mostly kind of shrug your shoulders type of day?
Well, I'm mostly shrugging my shoulders to put it bluntly. But with this, we've had the big rally in the S&P over the course of the last few weeks, and it's one to where it's the market that appears to be taking a breath on things for the time being, and with that, when we have big rallies like this, you don't have 100-point rallies every day forever. And so right now we're kind of in between it. If you look at a chart of it, and that the S&P, we started our rally probably around around the 4,100 mark, I would say, a few weeks ago, and then we're north of 4,400. But 4,600 is kind of the next step, or you could make a case for 4,500 or 4,600 is the next stop up. But the one point to make on this is that we're still nowhere near 4,800, which is where the all-time highs were at the beginning of 2022. And so we still have a ways to go up if we're going to go to all-time high land, but are we going to get there? The answer is I'll give you my 50% guarantee that we will be there at some point in the future. So that's about as good as I'm going to get with that one. A couple things that I am noticing right now is that bonds appear to be bottoming, so to speak, at least in the near term, in that we had the big rally when the Fed decided that they were going to be just mildly kind of sort of dovish, if you will. We've been coming down, but looks like we're kind of staying where we are, and that at least today anyway, with the 10-year doing what it's doing, we're not getting a ton of movement on the day. And so we might be settling in around the 4.5, 4.6% level. And I really think that's what things are going to be boiling down to with this market over the course of the next few months is are we done raising rates? Are we going to continue to raise rates? Are we going to what are we going to do with this? And so as much as it's painful for me to say this, it's really dependent upon the Fed at this point in time, in my humble opinion. So That's kind of what I'm seeing today. And then the other thing is that when you had emailed me and said that Scott Sheridan was going to be on the show, I got a little bit fearful because on my previous life working for Options Express, I remember there was this other company, this other little brokerage that really wasn't really viewed as a very big brokerage account that was kind of a competitor to us. It was called Thinkorswim. And then over the course of my years at Options Express, we had success at Options Express, but this company, Thinkorswim, proceeded to kick the living crap out of us at the trade shows and things like that. And so I still got those foot marks on my butt. So I'm just doing what I can to survive this call.
There you go. Bringing old enemies back together again on the option block. That's what we're here for. Mending old
Nothing
wounds.
personal.
Takes a lot for Uncle Mike to say that, Scott. You don't know him very well, but he is a very bitter guy. He holds on to grudges for a long time. So I'm glad to see that he is letting go of his past hatreds here on the show. Well done, Uncle Mike.
No past hatreds, just past it was literally, I remember in all the Options Express marketing meetings, like we even had a joke one time about, like, we saw some TV show about two companies having a flag football game against each other, and they're saying, oh, there's no way the upper brass would ever let us do that against Thinkorswim because they think that we're that much better than Thinkorswim and they wouldn't even belong on the field with us. And so they weren't saying that a few years later. So I do remember that.
All right, good stuff here. Let's see if we got some good stuff cooking in the markets. And like you said, it's kind of a mixed day out there, listeners, so it's kind of a mixed bag what we're getting out there. VIX actually doing a surprisingly decent amount of paper right now, almost 400,000 contracts on the tape, 390 right now. The ADV, 837,000 out there, so that continues to come in. But VIX looking like it might hit that ADV again today. So intriguing stuff on an otherwise kind of unched day. By the way, how fun was that show coming at you live from the SIBO last Thursday, listener? We love doing that. We love whenever the Flow Master's in town. It always makes it fun to do the show live in person. Adds that little bit of extra fun. We didn't do it from the SIBO trading floor, such as it is these days. We did it from the new SIBO offices instead. But that trading floor, as Scott and Andrew were alluding to, when you see it now, it kind of depresses me a little bit. It does paper, it does volume. It serves a purpose in the modern era, clearly. But I'm kind of with Scott in that camp of when you've seen the thing at its height, it's kind of hard to see the modern ramification that it has become. SPY right now, 4.75 million contracts on the tape. The ADV a little bit north of 9, about 9.2 million out there. The S putting up some numbers again, about almost 1.75 million. The ADV 3.5. We all know that's all on the back of all this 0-day fun. I think we had a poll about that last week, so I think maybe come up a little bit later. I want to get Scott's thoughts on all the 0-day fun. I'm sure he has some on it. Small cap, 608,000 contracts on the tape. The ADV, 1.8 million, so pretty much exactly a third of the way to their ADV. We know 1.8, that's a heck of a lot of paper for IWM to manage. Just speaking of which, let's check in on our friend Small Caps really quick. Small Caps up slightly on the day as well, up about 0.1% right now. So, yeah, kind of an unch day across the board. Everyone's trying to find their footing. The Qs, 2.2 million. The ADV, about 4.25 million. So Qs have about 2 million contracts to go as well. So a lot of treading of water out there in the markets today. Let's see if it's a kind of treading water day on the macro, on the big index side. Let's see if it's lighting it up on the micro, on the single name side. And the answer is no. It's a day that seems like time has forgot both sides of it. It only costs us 165,000 contracts to break into our top 10 most active today, listeners. That gets us to Pfizer. Again, you know, Pfizer's hitting our top 10, probably not the most active of days. Pfizer at about a 29 even right now, off about $0.50 or about 1.5%. So a little bit of dark side on the screen for them today. And again, good for number 10, 165,000 contracts. Number 9, our friends across the street, at least for the time being, it's Boeing. 204.90, up about 8.25 today. So a nice pop for them, up about 4.25%. China talking about ending their freeze on buying Boeing jets. You know, once China gets into something, they could buy a few of them. So, yeah, Boeing popping hard off that news, making it into our top 10 at number 9 today, 201,000 contracts. Number 8, this name's been all over the place over the last week. Did they get it over? They got close. Actually, they did. They got to 20.25, so they broke a 20 handle in Palantir on Friday. My goodness. About 1960 right now, off about, pretty much unched off about a dime right now. But Palantir, number 8, 212,000 contract. Man, this thing has been on the rampage over the last month. It was trading less than $15 right before Halloween, and now it hit the 20 handle. So just quite the rampage out there for Palantir. Number 7, the artist formerly known as Facebook. It's Meta, 224,000 contracts on the tape. Up about $1.70 today, about 0.5%, trading about 330.5 right now. And again, good for the number 7 spot. Number 6 going out to Softy. So a lot of our usual suspects dominating the top 10 again today, listeners. Microsoft, number 6, a little bit north of 250,000 contracts. Microsoft taking a little bit of a turn to the dark side right now. 367.37, off about 2 1/3, or about not even a full percentage point, about 2/3% out there. But again, good for the number 6 spot. Number 5, the Amazonians coming in early today as well. Only 343,000 contracts on the tape for them. They're off about $0.75, or about 0.5%, trading 142.85 right now. And again, good for the number 5 overall spot here. Number 4, listeners, the chip zone coming a little bit late today with AMD, number 4, 383,000 contracts. AMD taking a break off a little bit over $2, or almost 2%, trading 116 and about 0.5 right now. And again, good for the number 4 spot, 383,000 contracts on the tape. Number 3, keeping it in the A tech names, it is the fruit company, Apple. Only 490,000 contracts, so dropping to the number 3 spot today. A 184.60, off about $1.80 today, or nearly a full percent. Again, this one obviously has rallied quite a bit over the last couple of weeks. Everything has. This one was south of 170 right before Powell, now right around 184, almost 185 right now. Again, good for nearly 500,000 contracts. At this point, you can probably guess the top 2, listeners, if you've been listening to the show for any length of time. Number 2, it's the tip of the AI spear. It's NVIDIA, 590,000 contracts. NVIDIA popping 4 handles today, or not quite a full percent, trading 487 and about 1/3. That's a quiet day, these days for NVIDIA. But again, good enough for the number 2 spot. And number 1 takes a lot to dethrone it these days. It is Tesla, looking pretty robust today as well from a volume perspective, at least. 1.6, almost 1.7 million contracts on the tape. That's probably because they're popping nearly $8 today, 781, about 3.5%, trading 222.22. That's a lot of 2s out there, listeners. So, a lot of back and forth. The day that ends in Y. There's some drama with Tesla today. It's popping it up to the tune of about $7.50. To the upside. If you're here for a little bit of earnings action, you got some names still popping off this week, listeners. Tuesday, we have Home Depot. Wednesday, we have big box retail in the form of Target. And then Uncle Mike's favorite, Cisco. Thursday, other side of big box retail, it's Walmart as well as Macy's and Gap. Fridays, we got BJ. So a lot of big box retail going up out there, or indeed wholesale as well, going up out there this week. If you were curious, we do have the results for our friend Stone Cold. They were popping off after the bell on Friday. Listeners, they went into their announcement 10 3/4. Remember, we talked about some interesting, unusual like paper ahead of their earnings, thinking maybe someone thought the game was afoot out there in Stone Cold. Well, they were pricing in a decent move, too. They were pricing in about 10%. Actually, they're pricing in about 4%, and they delivered a little over 10, about 10.1%. So maybe our friend out there, we'll have to check in on them later. But our friend out there perhaps was on the right tip with Stone Cold, trading nearly $12 right now, 11.93, up about $1.25, or nearly 12% today. So a nice pop for them out there. If you want to check those reports for yourselves, we have those. We also have the earnings move reports, earnings move results, and of course the all-important earnings season report, which right now, listeners, is hanging out at about 114%. So that's pretty robust. Our long-term average is right around 100%, so 114. Pretty robust. Will it maintain that? Will it come in? We've been talking for a while. A lot of names are pricing in a little bit of extra juice this cycle, and they're mostly hitting it. So right now we are north of the average. Will that persist? Again, 681 names reporting right now. If you want to see all that data for yourselves, completely for free because we like you, theoptionsinsider.com is the place to go. Click on the Options News and Articles tab to begin your journey to the dark side of earnings fun. Meanwhile, it's time for us to continue our journey into the dark world of unusual activity. Yes, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we unleash the Eye of Sauron, see what it fixes its fiery gaze upon in terms of weird, interesting, or unusual trades. Scott, I don't know how much they prepped you for this, so I don't want to throw you to the deep end. But if there are any interesting trades that you've noticed today or the last couple of weeks that have come across your radar you want to chat about, just let me know, sir, as we dive right on in.
Let's do it.
All right, let's do it. We'll kick things off, Scott. If you want to chime in, by all means, let me know. Let's kick things off with a name we were just talking about a week ago, listeners. Let's check back in on them. We had a couple we profiled on the Monday show, and we said, you know what? We're probably going to know pretty quickly whether these are working out or not. We paid off one already on Thursday with the Flowmaster when we were doing our live from SIBO show. Let's pay off the other one today, even though technically it has not expired yet. Let's go back to Cinemark Holdings, ticker symbol CNK, and this one's trading. Well, before I tell you where it's trading right now, it's a bit of a spoiler. A year ago, it was trading $12.50. Then they crushed it down to its low for the year of about $8.25. So they really came for this one. That came right at the beginning of the year. It kicked off the year right about at its low for the year. So it's had a decent year. All it can do is go up from there pretty much. And it went up all the way to the tune of almost $20 back in early October. October 6th, it hit about $19.85. An excellent year. Also, the high for the stock for this year. Since then, it has retreated over $5 from that level. It's trading right around $14.30 right now. And that's important, listeners, because on the show last Monday, we talked about somebody coming in and swinging for some upside fences. They had some effervescence, shall we say, some optimism, some joy for Cinemark, and the earnings had just happened, I believed, and they were thinking that the upside was going to continue. They bought 6,000 of the Nove 17s for 20 cents. The stock at the time, listeners, was a little bit higher. It was $15.50. You can see where I'm going with this one. Again, the earnings that kind of just popped off, it seemed like they were full of rays of sunshine and optimism for the future of Cinemark. You know, movie theaters have kind of been a trouble spot post-pandemic. Maybe they're coming back to life. This person clearly thought so. They did 6,000 in that block. They did a total of 10,000 on the day. So they really liked this trade. And right now, like I said, the stock, $14.29. So clearly moving in the wrong direction. It is nowhere near the 17 handle right now. We checked right before showtime. All of these calls are still open. They never really had much of a chance to get out of these, listeners. They kind of bought the calls kind of at the high for the week on the stock. They never really got much of a chance. They had a little bit of brief moment Tuesday morning. The stock flirted with around unched, maybe up a dime or 20 cents. So they could have probably maybe scratched them there if they were lucky. But that was pretty much all she wrote. Ever since then, it's been straight down. These calls, unfortunately, still open. Seems like they're wearing it right now. Again, these haven't expired. They haven't gone away yet, but I think we've kind of seen the writing on the wall for these. So on the initial trade, they're out about $1.20. If you add up all the paper they did on the day, then obviously it's about $200,000 that they've thrown away on this. Scott, this has been a bit of a theme for us of late. We've seen a lot of near-dated optimistic paper, I think, to put it mildly. This time it's all driven around earnings in this name. And unfortunately, not going their way, sir. What are your thoughts on someone maybe getting a little bit too optimistic in Cinemark, sir?
So a couple comments there. One, around earnings as a firm, our customers tend to be massive sellers. So leading into it, because typically you're going to land within the range and you're going to get paid. I am a massive proponent of short-term options. My partner, Tom Sosnoff, is actually, I give him credit for creating these. We went to the CBOE about 15 years ago, probably give or take. And his idea was weeklies, which now weeklies are just standard. But his idea was to launch weeklies, and he had an amazing name for them. They didn't like it, but it was called the Quickie. And, they said, no. And then guess what? They came out with them. We're getting to the point now, obviously, you have a lot of symbols that have dailies, and I think they're amazing. Our customers, I know the regulators, one in particular, Gary Gensler from the SEC, he's not big on them. He's not big on trading, period. So he's trying to, let's say, create some issues that's going to make it more difficult for firms to allow trade them the way that they currently are. I hope he fails at this, along with some other things. But our customers, a lot of customers will look to just like this, come in and make a short-term buy and hope you're right because they're inexpensive, but obviously you don't have a lot of time. But our customers, for the most part, are buyers of the short term because they tend to sell meatier longer term and then hedge with shorter term because it covers them and is a little bit less expensive. So I am a massive believer in short-dated options. I think they're great for business. I think they're great for customers. More tools in the toolbox, from my perspective, is better than less. So it's a little bumpy right now with the regulators, but I believe in the end, the customers and the markets will win.
Interesting. I was going to ask you about this later, but we'll just get to it now then. It sounds like you're a proponent of all things zero-day, which is interesting and or surprising because we just had one of your cohorts, one of your educators, Jamal, on our Options Bootcamp program last week, and he said he was more lukewarm on the zero DTE stuff because at Tasty, you guys more like to focus on the overwriting out around 45 days. That's kind of your sweet spot. So he was a little bit more lukewarm on the zero DTE, but it sounds like, Scott, you're all in on the zero DTE train, sir.
So in fairness to Jamal, love him. And in fairness, that is the methodology of the network. You're looking about 40, 45 days out and covering about 21 days to go. So these wouldn't fit into that trading style. Now, easy to say that most of us have been around long enough to say that we've seen a lot of different trading styles. And I am not going to tell somebody yes or no to their trading style. There's one single quality or characteristic that every successful trader, in my opinion, has to have. That's not your trading style, it's discipline. So long as somebody maintains their discipline and maintains their style, I think they can be successful. So what I'm talking about is not Tasty Live and the methodology over there, which I think is great. I'm talking about what I'm seeing with customers who are coming from other sources, who are not followers of that methodology. And I do believe that zero DTE is here to stay. My analogy to trying to block them, there were a couple cities that tried to block rideshare years ago. I think probably the Tax and Limousine Commission were strongly behind those because obviously not good for either one of those. And politicians were originally agreeing with the lobbyists, and then all of a sudden they realized that the horse had left the barn and they couldn't stop it. So I think we have a very similar situation now. Unfortunately, there's so much, I think, misinformation about risk and the amount of risk that somebody is willing to take or does take by putting out a short-term option. There's no question about it that if you're short a short-term option and it goes against you, there's not much you can do. If you're out, 30 days, 45 days, 60 days, and something moves, you have the opportunity to adjust. If you're short something that's expiring today and it's going against you, probably not much you can do there. But that to me is just part of the risk of managing a position. So when I ask, just an off topic here, we allow naked short calls in IRAs, some limitations to it, but I had to fight for about 10 months with clearing firm, lawyers, regulators, et cetera, too much risk. So I'm going to ask you a question. I'm going to turn this around. This goes back to 2018 when basically we were up every day. We hold the naked short call at 100%. So I'm going to ask anybody that wants to jump in the answer, people on the phone. Our data team ran, I think, 350,000 events. Now, it has to be stocks over $10 and no volatility products. Out of 350,000 events over a year, how many times did it violate 100% from close to close?
2021, is that included in that data set?
No, it was in 18. So
okay.
Take out GameStop, take out some of those. This was in 18 when we had a more normalized market. But again, the answer is you can't offer short calls in an IRA because it's too risky. The account's going to blow up. So we ran this. I have evidence from a bullish year. Again, you could sell a put, obviously, because the stock can only go to zero. But the thought is, how high could a stock actually go? Wow, stock could go really, if you sell a call, it's unlimited risk theoretically, but the reality of it is 350,000 occurrences, zero. Not once did a stock violate 100% from close to close. So my concern when you have the regulators sticking their nose into areas like this, it is the perception is way worse than the reality. So when you hear, Wall Street Journal coming out with, those zero DTEs creating too much volatility in the marketplace, not a believer, I'm not a buyer, and they're here to stay. And I'll leave it at that. I'll turn over to somebody else.
off the top of my head, I can't think of any other firms that allow naked calls in an IRA. So that might give you a leg up there, Scott.
Yes, we are. To my knowledge, we are the only firm that does it. So, we have never had an issue. We have not had an issue with an account going debit from being short calls in an IRA.
There you go, listeners. You're going to pay margin for that, obviously. There's no free lunch at the end of the day. But I know a lot of you like to lean to the dark side. So if that's you, maybe your IRA belongs over there in Tasty. Mr. Rock Lobster, a lot to unpack there. We went on a lot of different areas, which is always fun here in the Odd Block. But we talked last week on the show, obviously, about these CNK, a.k.a. Cinemark calls. We kind of thought at the time they might be maybe heading the way of the dodo. That does appear to be the case, sir. What are your thoughts? Somebody betting on the near-term upside for theaters. And go figure, it didn't work out, sir, at least for not right now.
Yeah, I mean, ultimately, when you buy out-of-the-money calls that require more than, 2 standard deviations or something to make money and earnings, you're betting the farm. Maybe they were confused with that other movie theater company. What is it called? AMC? The one that
the ticker confusion. I thought I was buying AMC.
Looked at these and went, wow, the options are much more expensive at AMC. I'm going to buy these ones. So yeah, as we have said, a lot of out of the money call buying can lead to, in the short term, tales of sadness and woe. So once again, not a huge surprise, although I'm sorry this particular customer does not appear that they're going to make money, but it is a tale of sadness and woe.
Yeah, we don't normally get to pay them off so quickly, listeners, but this one just seemed kind of written in stone. We kind of come up against it already. We got some other stuff to talk about here on the show. But before we get out of the Odd Block, let's squeeze in one more really quickly. Kind of a funky day out there. Not a lot of crazy prints out there. One that did catch our eye, speaking of just, your old favorite, Mr. Rock Lobster, and maybe this might fall into that category. This is XP Inc. This is our old friend, the Brazilian investment management company out there. Ticker symbol, appropriately enough, XP. Trading 22 and about a quarter, off about 15 cents today. It's not a huge day for them. A year ago, they were trading $19.11, so they've popped a little over $3 on the year. On the low side, the dark side, they bottomed out at about $10.30. That came in March of last year before embarking on a pretty epic rally. So obviously, most financial names took a bit of a drubbing in the March timeframe of this year. Then they rallied hard. They brought it all the way up to about 27 3/4. That was in August, mid to late August. Since then, they've come in a little over $2. So they actually crushed it down to $19.50 again, right around Halloween. So they've, in the last few weeks, they've actually rallied it again, a little over almost $3. So it's been on a little bit of a run. Looks like somebody this morning, Mr. Rock Lobster, came in and did your old favorite, drawing a bit of the line in the sand on the 20.5 put. So an interesting strike, about $1.75 out of the money. Doing these in November. They liked them to the tune of 21,000 times they sold these things. This is right before earnings, too. They have earnings today after the bell. So these people playing with a little bit of fire here, Mr. Rock Lobster, blasting away at 21,000 of these puts. They're not that close. They're $1.75 out of the money, but they do have earnings tonight, so we all know that does add a bit of a wild card factor to it. What are your thoughts on your old favorite, but this time doing it on earnings day, Mr. Rock Lobster? What do you think?
So somebody it looks like they might have paid 41. I don't know. Did you see this, a line in the sand? I was kind of ambivalent about
it's a split the uprights one. I thought they were selling it, but I could see, if you want to argue the other way, I'm open to interpretation, sir. Never let it be said that I'm a prejudicial guy. I'm open to other ideas.
Well, the classic, though, is 21,000 trade 41 cents, and then they're offered at 40 now. So just whoever paid 40, just so they can feel 41, just so they can feel terrible for the 21,000 pennies they just have to give up at the mark. Actually, they're at 35 now. So they're really trying to punish somebody.
Wow.
So my guess would be that somebody wanted to sell them and didn't get to, and they're a little grumpy about it currently. That would be my take.
Let's hope they sold them then, so that if they didn't buy them at 41 and then they're crushed all the way in their face, that would suck. So let's be optimistic and charitable. Assume that they sold these bad boys. We'll know pretty quickly on these as well how they're going to turn out, listeners. Meanwhile, though, listeners, it's Monday, so it's time for a little bit of education. Yes, it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where we dispense some options, wit, and or wisdom and education along the way. Usually Uncle Mike holding court on some particular topic, but Scott came armed with a hot button issue he really wanted to discuss here on the Strategy Block today. This is one we've touched on in the past. We haven't hit on it a little bit on the show, so it's probably a good time to get a refresher. So maybe, Scott, let's start there. We have new listeners all the time on this show, so explain to them the pattern day trading rule and then why you're so hot and bothered by it, sir.
Sure, happy to. So if you're trading in a margin account, not a cash account, and your account is under $25,000 in net lick, doesn't mean that it has to be in cash. It's just the value of your account. That would be if you are a futures trader, excluding futures or crypto. So it's only on the security side. You are only allowed to make 3 day trades, which is defined as opening and closing the same trade on the same day in a rolling 5 business day period. So about 5 years ago, I started with an industry group leading the charge on this, trying to change the rule because the rule, in our opinion, as it stands, does not need to exist. It doesn't make sense given the level of sophistication of most front-end platforms. The rule came about in the late 2000s for anybody who was trading back then before the bubble burst on the internet move. There were stock day trading rooms, literally in malls around the country, where you could go in and give somebody 10 or 20,000, and they would give you, 10x that number to trade on. So if you gave them 10 grand, they give you 100 with which to day trade. If you lost your 10 grand, they would shut you down. The regulators, in my opinion, correctly identified that as an issue, saying, well, wait a minute, what if, 10 traders are trading there and they can't get out and they lose $1 million? Does the business have enough money to cover the $1 million? That's where they came up with this rule. Those shops don't exist anymore. And again, front ends have the ability to block people from making trades that they don't have the money to make. That's not my issue. The big issue, that is part of the issue, and that's what we're fighting. The bigger part of the issue, which very few people are aware of, is that about a year ago, FINRA changed. They're saying they changed their interpretation of the rule. My argument is that they changed the rule under the cover of darkness without doing what they needed to do, which was go out for a comment period. And the rule, as it used to stand, depending on the clearing firm where you were trading, they either gave you one reset a year or one every 90 days. So a reset would mean if you made more than 3 day trades in a rolling 5 business day period. So if you made 4 is the same as 1,000. It doesn't make a difference. If you violate, you violate. You would need to you are in what's called an equity maintenance call, an EM call, and you would need to ask your clearing firm for a reset. If you have one, they give it to you and you're good to go the next day. About a year ago, FINRA changed the rule. Again, they're saying they didn't change the interpretation. The rule now is that you get one violation in the life of your account. Let me say that again. You get one violation, and then if you do it again, you get a warning, you get a violation, and you're done. So what that means is if you are a TastyTrade customer, if you're a Schwab customer, a Fidelity customer, it doesn't matter where you're trading. If you are under $25,000 and you make more than 3 day trades in a rolling 5 business day period, you get a warning. You can get a reset. If you ever do that again while you're at that firm, you're done for the rest of your life. So what that forces you to do is either put $25,000, which unfortunately most people can't do, or you can't trade anymore. My analogy, and for people that don't understand trading, I know everybody here does, but when I'm talking to people outside the industry, and they look at me a little confused, and I say, let me just put it this way. You live in Illinois, which I do, and I roll through a stop sign, and a policeman comes over and gives me a warning. Somewhere down the line, days, weeks, months, years later, I go through a red light, I get another ticket, but this time I lose my driver's license for the rest of my life in the state of Illinois. I have not had one person say to me anything other than that makes no sense. And that is the world in which we're operating right now. And again, most customers are not aware of it. So we now have, when I started this 5 years ago, I had about 9 or 10 firms with me. We now have, I believe, 18 firms and 2 exchanges who have signed off on this. We have now gone to Congress. We are working that lever, and we're just going to keep pushing until either A, Gensler leaves, because I think once he leaves, the pendulum will swing, or until they finally come to their senses and say, okay, this doesn't make any sense, and they agree to make the change. According to the people that we met at FINRA a couple of years ago, they said this was the number one complaint from customers. So they're aware that it's a problem, but they don't know what to do with it. So that's my 5-minute overview of pattern day trading in the world in which we currently exist.
I wasn't aware of that recent update to it. See, that's good. You're educating people.
And most people are not aware of it. It's so punitive, and again, it makes no sense. When I give the people the analogy of losing your driver's license, like that's crazy. So, and there's in the current form, there's nothing you can do other than get your account over $25,000 or switch, which costs money, move to another brokerage firm.
I'm trying to recall what show we talked about. We had a listener question. It might have been our Options Bootcamp program recently. And a lot of people wrote in like, oh, you just wait for the flag to be removed from your account and you could do it again. Or a lot of people mentioned you switch to the E-mini or a few other ways. People have worked out end runs around it for now. But a lot of them were under that perception, Scott, that it was a temporary thing. And once that flag, however long they thought it was, 90 days, something like that, once that flag was lifted, you were clear. But you're saying that's not the case. This is kind of a one strike and you're out kind of policy.
Correct. That's how it used to be. But again, the rule changed recently. Again, I am calling it a rule change, not a change in interpretation. That's how FINRA is calling it. They're saying it's a change in interpretation. But you get one warning, and it doesn't matter what firm you're at. It's a FINRA rule. Every firm has the same rules. You get one warning. You got to reset immediately if you want it. And then if you do it again, you're done at that firm. Again, unless you can get over $25,000 or you wind up switching firms.
So all of you who wrote in with all of your end runs around, maybe we'll have to play this segment for you. It might be a little bit shocking. I know, Uncle Mike, we talked about pattern day trading in the past. I know you probably bumped up against it probably more in your old days at OX maybe than you do now with some of your clients. But any thoughts you want to add? And are you as surprised as I am, this addendum here, that it's effectively one strike and you're out?
I mean, I think it's ridiculous all around in that we live in the age of technology. Why do we have day trading limitations at all? In that, why can't we have the stock settle right there on the spot? Why do we need these extra 3 days? Has always been my gripe with that rule, and that it doesn't affect me that much. Just as a portfolio manager, there are occasions to where I'd say maybe once every 2 years or so, I'll get in on an option to, as part of a multi-leg stock and option trade of some sort, and get a big move in the market, and then it automatically triggers my limit, and then I end up doing a day trade, and then I'll get all the red notices on my account saying, if you do more of these, you're in trouble or whatever. And then it's really not an issue with me. But it just makes me think of the whole sign stealing thing in the Big Ten right now, in that I'm a high school football coach and I'm an assistant high school football coach, and we change our signs every couple weeks. And if we can do that and we don't get paid millions of dollars, why can't the Big Ten coaches change their signs every now and then? Why is that even an issue? I think this is the same thing with all the technology that we have. I can understand why you don't want to have maintenance or things like that and giving people 10-to-1 leverage. I totally get that. But frequency of trades, come on now. We're better than that. That's just kind of my take on it.
Mr. Andrew, I'm sure a lot of your clients and mentees over there at Option Pit have probably bumped up against this in the past, probably a pain point for them as well. What are your thoughts, sir, on the pattern day trading? Maybe it's time to update it or get rid of it, sir.
Yeah, I think it seems like its time is past. It's one thing when you're trying to avoid bucket shop margin, but as Scott says, like modern margining is not really it's not really a problem anymore. So it's like these rules that are sticking around, and who came up with them, who asked for them, and why do we need them? I think at this point, but it takes, and I'm sure Scott seems like he's a veteran at this, but the inertia to make things more customer friendly It's probably trying to move a large rock right now. So I wish him luck. I know a lot of option pit students would be happy because even just making an error, people that like, especially with the short-term options now, there's multiple opportunities that we didn't have before because you've got gamma every day, basically, instead of the old days when we didn't have it. So the rules are clearly, the market is running way past the rules at this point. So, but I wish him luck. If he has a petition, I'll sign it. Yeah. Get rid of it.
As will I.
You. And it has been a battle, and I am not stopping. So I can't stand bullies, and I feel like we're up against a bunch of bullies with the regulators. So I'm going to continue to fight, and I believe we will be victorious, but I don't think it's going to be in the current regulatory environment that we're in.
Well, speaking of signing things, Scott, you have inspired us here. So we just put out a flash poll to our audience listeners. We know at the end of the day, our audience, the ultimate arbiter of all of these things. We said, quite simply, is the pattern day trading rule a necessary protection for retail traders, or is it an outdated concept that needs to be updated or indeed removed? Right now, Scott, I thought it'd be 100%. It was 100%, but we have now actually just ticked again. Wow. Okay. Some people like it, apparently. 2/3 saying no, it's outdated, and about 1/3 right now, Scott, saying yes, it protects traders. So more lovers of the pattern day trading than I thought, but we'll see. This is going to run. It's a flash poll, listeners, so it'll run by the time you listen to the podcast. We'll keep it live for that. It'll be pretty much a one-day thing. Won't be our question of the week. But there you go, Scott. Inspiring a question for our poll. Maybe listeners, if you like Scott's fight, maybe you can join the fight. Maybe we need like a change.org petition, something like that, as we keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of the week, at least until our Thursday episode. Scott, you won't be on our Thursday episode, so we'll start with you. Obviously, every week has a lot of things everyone's keeping an eye on. What are you focusing on for the rest of the week over there at Tasty, sir?
I think we're heading into early Thanksgiving mode. I don't think there's going to be a lot of movement. Right now, it doesn't seem to matter, what comes out. We have a bunch of economic data with PPI, sales, et cetera, coming out in the next couple of days. I don't think it's going to be a big mover. It appears the market wants to drift higher right now. I actually think that if there's anything that's going to change, it could happen next week on NVIDIA's earnings.
I don't know why you would say that. It's not like NVIDIA has the potential to be a market mover or anything. I don't know why you would say such an outlandish thing.
Right.
So, yeah. Well, it looks like by today's action, we might be, you're right, setting into a little bit of early holiday mode. Still at the end of the show, listeners, S&P still flirting with unched to slightly red on the day. It's not a heck of a lot going on. Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on until our Thursday episode, sir?
Well, as much as I'd like to start selling some weekly naked short straddles on NVIDIA, I think I'm going to pass for now. But with that, just seeing if we hold the levels we are with rates to see if we're getting a floor in on those. I agree with Scott that we're not going to get a lot of movement. I think the day with which I'm looking for that we might get some type of movement is when we see results from Cyber Monday or Black Friday. But aside from that, I do think we're into Thanksgiving mode, and I'm excited about telling my annual Thanksgiving joke on next Monday's show.
I look forward to it, sir, with great anticipation every year. But before we get there, Mr. Rock Lobster, sir, what are you keeping an eye on until the Thursday episode with your usual appearance, sir?
Yeah, there's a little bit of tension, I think, in the VIX curve, like a little forward vols, a little higher than average, relative, at least the way we look at it. So it's like the market, I think it wants to give it up. A little bit of the short-term latent vol hasn't quite yet. And I have to say, if Moody's can down or put the U.S. on credit watch, and VIX is basically down on the day, weekend adjusted, and Dow is up. It just looks like we're in drift mode because nobody cares. They just are going to care that they don't own enough stock by the end of the year. Your Qs are up 40% on the year. I don't know what else to say, but somebody somewhere wants to buy stocks. And any of the current news is not dissuading them. And I don't see any reason for that to change in the short term, unless, of course, obviously some funky piece of bad news that comes out. But right now, I think the bond market is in control of rates, and right now everybody's good with it. So onward and upward we go.
Unfortunately, that's as far as we go on this show, listeners. But before we wrap up, let's go back around the horn, see what everyone has cooking that may interest you folks out there, at least until our next episode. Scott, we'll start with you. Obviously, you talked about a lot of cool stuff you have popping off over there in the land of Tasty. If folks want to kick the tires and light the fires over there for themselves, where should they go? What should they do, sir?
It's really simple. TASTYTRADE.com will give you everything that you need. Great chat feature on there. If you want to call us, 888-247-1963. Or if you want to send an email, support@tastytrade.com. We're happy to get back to you. We've got a great support team, super responsive.
There you go, tastytrade.com, the place to go to learn more. You can always kick the tires over there, tastytrade.com/pod as well. That'll all get you to that same place for you, too, to kick the tires and light the fires over there. Mr. Uncle Mike, where should folks go if they want someone maybe to hold their hands through these tumultuous markets, sir?
Head to stcharleswealth.com if you're looking for a financial advisor that uses options in tumultuous markets, if it's appropriate for the client, of course. And love to have a conversation with any of our listeners.
And Mr. Andrew, last but not least, sir, where should folks go if they want some mentoring in the world of volatility?
Yes, mentoring in the world of volatility, optionpit.com. If you want to learn how all these funky vol products work, how to pair them with SPY, how to have theta positive gamma style trades, you can learn how to create all that stuff. So with probably over 100 years of trading experience, I think, at Option Pit now. So been around for a while. All the people that have been trading were all floor traders at one point. Or bond traders at Bear Stearns. So if you want to learn how all this stuff works, come on over and we'll teach you how it all works.
There you go. Optionpit.com is the place to go. We got to get on out of here. Checking our chat really quickly. We got some voices in favor of the pattern day trading, which is interesting. We got Age. He's one of our resident contrarians. He says, I may be the contrarian, but I think day trading rules can be good to try to prevent the market casino with zero DTE options in low dollar accounts. You're coming back to that 0 day. I see what you're doing. I know you're not a fan of the 0 day. Right now, our poll, 80% exactly, just tick saying the pattern day trading rule is outdated. Yes, it protects traders, 20%. That's over there at Options on Twitter, listeners. Get in there. You got about a day or so left to make your voice heard. That music, of course, means we are done for the old OB today. But not done on the network, not by a long shot. If you're hanging out in the pro, hang out there, have some fun. Debate with Age, his stance on pattern day trading. We'll be back again in a little bit with the crypto rundown. I'll be joined in the crypto hot seat by our guest, Mr. Greg Magardini from Amber Data. He liked it so much a few weeks ago, he wants to come back, talk to you folks again. Obviously, a lot popping off in the world of crypto. We'll get to all of that fun in a little bit. Back again tomorrow, of course, with the Pro Q&A hot seat. Wednesday for a little bit of the old options boot camp. Maybe some tasty folks joining us out there as well. Before we're back again on Thursday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Tasty Trade. You take the unbeaten path. You root for the away team. You wear shorts in winter. You don't put ketchup on a hot dog. So why wouldn't you trade with a broker that lets you go your own way? Tasty Trade. Stocks, options, futures, and more. You choose. You trade. Chart moves with hundreds of custom indicators. Stare at the candles till you see them in your sleep. See it, click it, trade it on mobile, web, or desktop. Supported by a trade desk that knows how traders think. The data, the tools, the knowledge. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.